Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore Fintech Festival, and joining me for this segment, we have Iain Morrison. He's head of Global Trade and Receivables Finance at HSBC Singapore to discuss how trade digitization is going to take shape. It is great to have you with us, Iain. Welcome to TradeTalks.
Hi, Jill. Thanks for having me.
And this is actually very interesting for me. I've been looking forward to this interview because digitization of trade sounds like a fascinating topic. Give us some background on that. What are some of the factors that are impacting the speed of digitization of trade?
So first of all, standards. Without standards, we ride on rule books, without standards, we really can't move forward with digitization. So we've been working very closely with the ICC, and 21 trade documents are already agreed and 14 more to come. So that really gives a basis and foundation for how you digitize trade. The second bit, also enabler, is legislation. That legislation relied really heavily on rule books. You had to sort of agree how to work together. With legislation now in place, Singapore agreed the Electronic Trade Transaction Act in 2021. UK did one similar this year. I know Germany, France had something going on at the same time with the US. And then there's multiple countries putting legislation in place. That enables standards to be more uniform and also allows people to use a common legislation. But what's also interesting is a lot of trade actually is in services, so they don't actually need necessarily to involve documents. So trade and services are already 20% of the global economy. In Singapore, it's 70% of GDP is services. And that lends itself naturally to digitalization because it's dealing in intangible services and goods. The other one that supports that is platforms. We've seen an increase in B2B platforms in recent years. They're sort of the new ports of the future. In the past, we went to Singapore, Hong Kong, Dubai to set up trading operations. They're now the virtual ports, and they are digital by nature, and therefore they're really helping accelerate digitalization. The one that you'll hear a lot about is electronic bills of lading. Mm-hmm. So that is how you move containers around and documentation around that. Historically, it's a very heavy paper trade. Now, this year, the Containerized Trade Association and the Bulk Trade Shipping Associations have all agreed to go to electronic bills lading 100% by 2030. That's a real milestone to try and push that forward. As a bank in September, along with some of our peers, we agreed to support that and enable that as well. And the last one is public infrastructure. A lot of governments are really supporting customs declarations and some of the cross-border shipping data exchanges through customs to public infrastructure. In Singapore, there's a network trade platform. This year, they've done customs a long time ago, but now they've done electronic guarantees. So all guarantees the government can go electronically. So through those steps, you can see it gathering momentum, and it's quite exciting to see it all pulling together.
So how do you see trade digitization taking shape?
I think it's so fragmented, it's global, there's so many players, so that's probably the real challenge. Alongside that, with cross-border data restrictions and also some geopolitical considerations, it is going to be fragmented for a while. So I think there's probably 4 building blocks. The standards I referred to earlier on, but that's also setting them and using them. The second one is legislation. Again, really getting legislation in place to enable those standards to come to life. The third is reliable platforms. How do we get platforms work together, banks, fintechs, industry, to get platforms that are usable and scalable? And of course the last one is adoption, driving adoption, and really getting people to use that.
So how is HSBC positioning its trade financing business to support the future of trade?
So I've made reference to a lot of paper. So in the first instance, how do we ingest paper? So we use cognitive automation to ingest paper and convert it to data, to give back to our clients the data forms. That's how we manage the today. In terms of connecting with our clients, we're very keen to see how we bring our solutions to them. So HSBC Connect is our host-to-host solution. That puts HSBC in your office, as it were. We have online banking, that sort of puts it on your desk. And then more recently with our Trade Transaction Tracker app, with our HSBC app, it puts it in your pocket wherever you are. So that office to desk to pocket really brings solutions to you. In addition, behind the scenes, we have a multi-year investment in HSBC Trade Solutions, which is the core back office processing system for Singapore. It's for the HSBC Group. It's a new technology stack for our back office. What does it mean for a customer? It means a few things. It means we can be faster and nimbler to react to market changes. The technology can evolve faster. We can connect faster to clients, to platforms, and really build those connections. Technology can converge faster, so AI, distributed ledger technology, it gives us the ability to really converge faster. But most important, it gives us the ability to give better customer experience, both for our customers, but also for our internal customers and our staff. And a good example of that is a recently launched product, TradePay. It's an electronic trade loan where in the past it may have taken a day or so to get your loan drawn down, and now it takes 43 seconds, draw down your loan, pay it to your supplier, instant advices to buyer and supplier, and that shows how technology has reduced hours to seconds and really brings efficiency to our customers.
All right, Iain, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me from the Singapore Fintech Festival. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.